Hi guys, and welcome to chapter 3. Now in this chapter we'll start off by getting you set up with the correct charting software to analyse both technically and fundamentally. Now many of you will be aware of this charting software already, and that is because it's tradingview.com, and most of you will know this from Forex or stocks. However, for those of you that are new, I will go over this anyway, as this is essential to mastering charts. So when you do sign up, which again I do recommend, it does just streamline the process, you will be brought to the homepage, which looks something like this. You'll have your market summary, you'll have the top posts from the authors of the day, you'll have some more analysis, you'll have some news on the right hand side. Again, this is not necessary, but if you like it, take a look. Now you will notice it says Go Pro. Now Go Pro is recommended if you trade Forex or stocks, as you can have multiple currency pairs up at once. You can monitor different time frames all at the same time. However, with crypto, things are slightly different. Whereas you would normally be monitoring loads of pairs, with crypto, we simply look at one or two cryptos on a few time frames. There's no real rush. Once we've done our analysis, we close the page and we're done for the day. So what we'll do is we'll go straight to the charts. Now, I do have multiple setups from when I did have Pro. However, I have now got rid of that package. So what will happen is you will immediately be taken to the chart page. Now yours may look a little different to mine, as it may be your first time opening this. And what you may have is some indicators, a grid chart, there may be all kinds of unnecessary stuff on the page. So to start off, just simply right click anywhere where the chart is not, go to remove, and then just remove all drawing tools, or if you have indicators, remove the indicators as well. Now we have that, we have a bit of a cleaner chart. Now one thing you can do is you can go to properties, and properties is where you can really customize what you're doing with the chart. So for example, I can change the colors to blue, green, yellow, orange, you name it, you can do that. However, for now I will stick to green, as that is how I prefer this setup. When you do have Pro, I should probably mention this, you will constantly get the little notification in the left hand side. These are simply advertisements which are part of the package if you're not going Pro. Simply press that, hide for now, it's gone for another 5, 10 or 15 minutes. Again, you can change the theme, dark. This will change the entire user face, and whilst this does look quite cool, I do prefer the light theme for the time being. Now if I go to this, I'll go to cancel. This will put my chart back to normal. Now the first thing we want to do is we'll want to get you familiar with the charting tools and the software you will be using. So on the left hand side here is every single tool you will need to analyze the charts. We don't need any of the fancy stuff, we need simple analytical tools. So for example, the trendline tool. Simply select the trendline tool, choose the color, choose the thickness, choose the width, you can even choose a dotted style. Simply connect it anywhere you like and draw the tool. Once done, deselect and the little circles will go. You can also have a horizontal tool, which is what we will be using very often. Again, simple. If I need to alter this, I can increase the thickness, I can make it dotted, I can do whatever I like. However, for now we'll keep this thin, we'll keep this simple, and we'll delete this. One thing you may need as well is an arrow or a horizontal ray. Instead of making the whole horizontal line from one end to the other, it does it from where you select it. So for example, you can select that here, and it will make the ray from that point onwards. Let's delete that. Now we'll move down to these tools. Now the only tool we will be using from this selection is the Fibonacci tool. Again, very simple to use tool, and I'll actually be covering this in another lesson, as this is completely different to what you would expect with Forex and stocks. Again, select the first, drag it down, select the second point, and that is that. And then you have the Fibonacci tool set. Delete this and let's move forward. You may be using a few of these, although it will most likely be the ellipse tool and the rectangle tool. And again, this is a very simple tool to use. Select it from where you like, click once, drag, and you can maneuver the box and rectangle however you like. Select it, connect it where you need it to be, and then stop. Just like that, the box has been set. So now we can delete. The text tool is not really necessary, but then again, if you need to give yourself little reminders or you need to put a price label here, you can do so by simply pressing this and then just maneuvering this to wherever you like it, and this will update the price depending on where you drag it. So again, if you need a little notification here, you can then double click this and select the price you want, 3,500 as an example. So this is all down to you and personal preference. So what I'll mention now is we may need the long and short position tool or the forecast tool, but to be honest, it's not likely we'll ever need these. We're going to stick to mostly the line tools and the Fibonacci and the box tools. This has popped up, simply delete and it will go. Down here we have the more funky stuff which isn't necessary. You don't really need you don't need the measuring tools. You may need the magnifying tool, but you can simply do that by moving the mouse to the bottom of the page. From here you can zoom in, you can zoom out, you can move left and right, and you can even make the chart extremely small by moving your mouse in and out on the chart page. By simply dragging this up and down, you can increase the length of the chart. I like mine nice and wide, so I'll leave it just like this. On the top, we have more features, like the time frame. You can choose the format of chart you have. Again, you could easily make this a line tool. You could make this a bar chart, like a candlestick. You could even make these areas, baselines, and line breaks. Again, not needed, we're sticking with candlesticks for this segment. If you press the settings, it just brings up the same setting bar again, so don't worry about this. Here is where you'll find the indicators. So by pressing this, you're able to search for every single indicator TradingView has to offer. And surprisingly, there's a lot. Again, we won't need this for now. If you want to go back and forth, simply press this and undo all of your changes. And then here is where you can save your chart. So you can load a future chart. So I have a lot of selections here from the Forex days. However, I do have Ripple and I do have Bitcoin. If I need to change, I'll simply click on one of these and then change the chart to a crypto chart. So now we move on to this side. This is where, again, you don't need this stuff, but it's good to have a little look. So you have the watch list, where you can check all of the pairs you like. You can put them all into one little watch list. You can have alarms and alerts on certain prices. Again, not needed at all. If you scroll down, you've got stuff like hot lists, data window, calendar, and my ideas. Then you have the social side, where you can get involved in public chats, or even, I believe there's a news section. There's notifications of public news, you name it, you can most likely do it on this software. Now, the one final feature that we will mention before we actually go straight into the analysis is this, and that is the screenshot tool, one of my personal favorite tools. Now, if you select this, you can go to save image, and this will bring up a high quality screenshot of your image. All you have to do is right click and save this image as to your computer. Now, if we go back to the chart, you can actually see Bitcoin soaring right now, and it has just broken all-time highs. But what we can do is simply change to any crypto we want from this little bar here. So for example, now the charts we work with are usually always Kraken charts, unless stated. From here, we can easily switch chart and save it if we need to. So if I save this now, the next time I load the Ripple USD, the Ether chart will open instead of the Bitcoin. Just like that, we're now at the Ether chart. So I can do this for all of the other Forex pairs as well. So I do need to get around to that eventually. So guys, that is all for this lesson. Again, please rewind, take notes, and make sure you fully understand this before we move to the next concepts. Although throughout the lessons, you will gain the experience to become a master of this anyway. Now guys, let's move to the good part. See you in the next lesson. Now this lesson is designed to address the common misconception between cryptocurrencies and Forex and even stocks. And what is essentially happening at the moment is you're getting waves of investors coming in who have traditionally been trading the stock or Forex market, and they're trying to bring the same approach to the crypto market. And now the problem is the charts, the technicals, the fundamentals, and the overall dynamics of how the market works is completely different. So it's going to be a short lesson, but I just want to kind of abbreviate and explain to you guys how you need to approach this market. And you can already see just from the charts alone. For example, my XRP chart here, you can see the absolutely insane moves that can happen in a very short space of time. So we have got huge moves to the upside. This is a rise of almost 4,000%, and this took place within the period of less than a month. In fact, it took about 2 weeks. The spikes are a lot more manipulative. There is no real responsiveness to technical lines, in particular support and resistance. Now, there are certain strategies which we are going to cover in the next lesson on how to mark these levels, but even by taking a quick look at my Forex charts, you can see a huge difference in not only the space of the charts and the support and resistance, but also the way the levels are respected. So you can see off the bat that these charts and the lines, for example the resistance, it hits resistance and it immediately reverses. It hits a support, it will break through, it will retest, and it will crash down. As you can see here, retest, breakthrough, bounce up. The levels are heavily respected. When you go back to XRP, you're seeing a lot of huge rejections, spikes. If you can notice, I am actually putting my lines a lot closer together, and that is because if we were to get rid of these lines, you would essentially miss out on all of the chaos happening before it bounces from your support and resistance lines. So if you were to duplicate the Euro chart here, for example, and increase this even higher, you would have no way of really determining what's going to happen next, where the price will go, and in fact what you're even going to retest next. So we have to remember cryptocurrencies are currently in an unregulated space. It's driven from speculation alone. The technical analysis does work if you follow the strategies we use. However, if you're trying to take this with the same approach you would do in any other market, you're going to get burned and lose a lot of money very quickly. So what's happening at the moment is a lot of these investors are complaining, or they're trying to sell courses, or they're trying to post analysis that they would use in Forex, just like we would. And again, they're going to do this by posting Fibonacci's, lines, support and resistance, counter trends. And what's happening is they're drawing them incorrectly. So there is no such thing as a certain set of rules at the moment. It all depends on a case-by-case basis. So every single crypto you look at will be analyzed in a completely different way. So for example, with the XRP pair here, we have got a trend line and a counter trend, and these are actually going from the wicks to wicks. However, if this was Forex, this would most likely have been from here or here. So you can do this, but then there are exceptions where this will need to go here, or you can drag the line down even more to here, and as you can see, it is slightly respected. However, if you drag it up to here, there is another respected level and a breakout, but you drag it to this zone and we can see the real breakout is officially here. So again, it's a case-by-case basis, and you need to adapt to this over time. This will not come easy. This is where you have to come back to the videos, get the pen and paper that I did mention in the very first two lessons, and just keep going back and looking at these charts. The amount of time you spend on the charts is really going to determine what you get out of this in the long term, especially when it comes to getting entry points and exit points. And today, for example, we have this current situation where we have already broken out from the trend line, we've retested, we've spiked up, and we have dropped down from this zone. Now, many people would have been suckered in, expecting this to be a reversal at least back down to 2.3. However, we have not reached 23 cents, and price has already, within an hour or two, spiked back up to 26 cents. So in essence, all I want you to take home from this lesson in particular is just try and break away from the ideologies you already have from previous markets. And over the next few lessons, the strategies you're going to learn will have to be taken with a pinch of salt compared to what you've learned previously. I need you to reprogram your brain and completely consider this as a new asset class. So let's move on to the technical analysis. See you in the next lesson. Hi guys, welcome back. Now this is where we begin to actually break down the charts and start analysing them technically and fundamentally. And the first thing we do, which is absolutely essential before any form of analysis is done, is we actually have to break down the charts with something called time frame analysis. So what you can call this, and you may have heard this before in fact, it's called top-down analysis as well, especially in Forex. So what we do is, the essential strategy behind this is we start from the monthly time frame. And from here, we work our way down to the weekly, the daily, and then we begin to find our entries from the 4-hour and the 2-hour chart. Now with crypto, you can essentially find entries from the daily only, as the market is so volatile and so hectic, you don't really need to be digging down to the 4 hours and the 1 hours, for example. So what we'll do is, we'll go straight to the 1 3-month chart. Now, what this means is every single month a new candlestick is formed. So every single one of these is a month's worth of data. So what I'll do is, I'll zoom this out a bit. You can see my zones that I've placed have already been selected from the monthly chart. So if I was to get rid of this and get rid of this, you can see slightly clearly we have a key level of support here. We have a key level of resistance here. We have slight zones of support and resistance here, which were actually found on the weekly chart. So ideally, the main levels of support and resistance we want to be finding first from the monthly chart. From then, we then break down the next few support and resistance zones on the weekly. So what we'll do is, we'll go to a fresh chart, so you have some fresh content to work with. We'll go to the Kraken chart. We're going to get rid of this. Going to go to the monthly chart like so. Now we can already identify key levels of support and resistance. So what we can see here, we have already got a key level of resistance here, just underneath the $400 resistance. So there we go, that's 389. And as you can see, we have two major levels of test here. In fact, three, a full spike through this level. This is what triggered the original downtrend. So we already know this zone in particular can be considered a key level. Once broken, this is when the price skyrockets. So what we can find now is another few levels of support and resistance. We have one here. We have another support level just here. Now, I can see a few more, and this will take some training to actually spot these levels. However, we want to break this down now on the weekly chart to really fine tune those levels. So if we go to the weekly, we can now see the levels that we initially set are literally pinpoint on support and resistance levels. So we can see a test here, twice the price has fallen from this zone. We can see the fall down. We did have some support here. We had another key level of support here and another key level of support here. And again, once the price broke through, all of these levels are almost hit to the absolute T. So what we can do now is we can set another level here. That's another key level. We can also set another key level just here. Now what you will notice is there's no symmetry to these levels, and this is why so many people fail to make money with cryptocurrencies. That's because they're going for the same strategies they learned from Forex, and they're trying to get an even distribution of support and resistance lines, and that's just simply not how it works, guys. And in fact, we can even add this one here. So what you're essentially doing is you're trying to put as many levels of support and resistance as possible to try and predict every single move that will be coming. And this actually allows you to get a very high probability of success when predicting these levels. So as you can see, we've covered the chart in lines. We have accuracy on all levels. Now we can drop down to the daily and see just how accurate these levels are. And from here, we can fine tune again. We can actually remove some levels. So what you'll notice is every single level here has been hit to the absolute T, and it's completely perfect. Every single level has been tested at some point, and every single level is also respected. So what we'll do, some of these are actually quite unnecessary. So what I will say for this example is instead of having lines, we can get rid of some of these. We can keep this level. This is definitely a key level, as this is the final barrier to $400. So what we can do now, again, not needed now as we're way too far up to worry about this level for the time being. This was a key zone of manipulation, as you can see twice now. So we will keep this level for the sake of any manipulation that may come in the future. So what we can do is, we can see this level is respecting also. This level is another respected level. So all we can do is get the rectangle tool, just like we did up here. We can just start marking some extra levels. For example, just a small level here. And what you do is you right click this and you press visual order and center back. This puts the candlesticks back on top of your zone. So this is almost in the background. So there we have a rough strategy and an approximate way of analyzing these currencies and cryptos. So what you can see from now is when you zoom back to the weekly, is we actually have a nice outlook and a nice range of barriers of where the price will go next. From here, we can obviously move down to the counter trends, the triangles, the patterns, but for now, just stick with this and really get a grip of this video, because this is a fundamental of your analysis. If this is incorrect, all of your entries, all of your sales, all of your targets will be incorrect. So if this is wrong, the whole foundation of your trading is wrong. So if we go back to the weekly now, another quick insight for you guys is this. We spiked up, we hit this level, we fell down. Our level of support that we've marked has been respected 1, 2, 3, 4 times, including a huge manipulative drop down to this level where all the buy orders must have been set here, which triggered the price all the way back up to another level that we set. We now drop this down and we're currently fluctuating between another level. So the way you have to see this is you're setting yourself the foundation to succeed. Now, let's move on to the next lesson. So in this lesson, we'll be covering the Fibonacci tool. Now guys, I'm hoping you're starting to see a reoccurring theme in every single lesson, especially on the technical side. And that is because I want to try and point out loud and clear, everything we do here has to be approached differently to the Forex and stock market. Now, whilst the fundamentals and technicals are almost the same, the way we apply them, the way we respect them, and the way we anticipate retests of these levels have to be very different. So what I'm going to show you is the Bitcoin chart right now. We're currently at 5.8. I apologize. We actually hit 5.848, I believe it was, just to the absolute T. Now this zone was highlighted, and it was highlighted for almost 2 months prior. We were expecting, once we broke out from $5,000, to actually soar straight to this level first. From there, we were expecting a slight pullback, potentially back to 5,000, where we would then exceed to the higher level around 6,900. Now, people have been asking us, how did you anticipate this level? Well, besides the technicals with the lines and the horizontals and the breakouts, there's actually the Fibonacci tool. This is a very, very simple tool. But with the Forex side of this, you will know that when you use the Fibonacci tool, you do have the 38.2 and the 50% as well. Now what you will notice with mine is I've actually completely got rid of those levels. I've done that by simply going to style. 0.382 and the 0.5 have been removed. And that's because these levels do not work with cryptocurrencies. It's a very common misconception when the price will instantly go to the 38.2. You now believe it's going to be a quick retracement and price is going to fly. It will then go to the 50%. And again, you think, cool, another retest, we're done, we're ready to go. But price never respects these levels. Almost every single time, I'd say 99%, we will hit the 61.8 or the 78.6 at least. If it is the first ever time the crypto has hit an all-time high, the retest will normally go to the 78.6. This can take a matter of weeks or months, but the 78.6 after testing new highs is very, very common, especially if it's the first ever one. Now let's go to the Bitcoin example. I'll show you this again with a few examples. So we had this Fibonacci tool, and again, this has to be, I may disclose, on the weekly chart only. Because we're long-term investors, we're not looking to trade this actively. We always set the Fibonacci levels on the weekly chart. And this is because it gives us the overall long-term target. And the way these cryptos move, guys, the long-term target normally gets smashed in literally a day or two anyway. So if we get the Fibonacci, we get the weekly chart set. And now I'll show you my highlighted zone. So when I draw this, it's as perfect as possible. And again, one thing I should mention with the Fibonacci tool, it doesn't always have to be from wick to wick. This is also a case-by-case basis. There can be times where you draw from the wick, but then you set it to the actual body of the candle. But in this particular circumstance, we are doing wick to wick. And as you can see, we've had a perfect, absolutely perfect test of the first target we were eyeing up. And you will notice the retest actually happened dead on. A previous resistance turned support level. If we draw that here. We also correlated that perfectly with the 61.8% retest. And now we'll just draw a simple tool here. That's really all it is, guys. It's just simple patience. We waited for the breakout. We made all-time highs. We already knew the only logical level of support was already the previous broken resistance at around $3,000. When you draw the Fibonacci tool and you see this correlates perfectly with the drawn levels, you already know the likelihood of price falling back here in literally the matter of 2 weeks. It just really puts the odds in your favour. Now again, what I always expect is I always have a safety barrier. I always believe when it hits the 61.8, the likelihood of hitting 78.6 is still huge. It's a manipulative market, so we could hit this level. We could have consolidated slightly. We could have even spiked lower, but the lower spike usually always hits the 78.6 to the absolute T. From there, we close the candle back up where we originally predicted of 61.8%. From there, we soared straight to our initial target. So what I can do now is go to the daily. You can see this slightly clearer. What you can see is we dropped down. People may have predicted this would have spiked straight from this point. However, the candle went down straight to our level. It does not have to be perfect. We just know it's tested this level. It's correlated with 2 of our predicted zones. That is enough for me to continue and expect price to climb higher. And as you can see on the daily now, the price we were anticipating, the minute we've hit this level, you can already see the sell orders from institutions and market manipulators who are also eyeing these key levels. All the sell orders were set here. So the minute we've hit this price, we have shot straight down. And what's happened now is we're currently trying to find some support. And the only real logical support is at 5,000. So we may see another rollover straight to the $5,000 region. And from here, we could draw a Fibonacci. And I have no doubt this should correlate to some extent. Perfect. So if we draw from this high here, again, we don't use the daily normally, but if you want to find some short-term retest zones, we can draw the Fibonacci on the daily from the lowest high. We draw this zone here. You do not necessarily need to do this, but this is how I predict zones. Again, you can draw that down to, in fact, I'll make this zone wide. I'm going to predict this zone. Price could easily fall within this region here. So we have some key levels of support and resistance here also. So this can be expected. So what I would recommend, if you're looking for short-term pullbacks and where price may go, keep the Fibonacci on the daily tool. However, if you want to just be patient and how we recommend investing at Kryptonary, only draw the Fibonacci on the weekly and just wait out the next expected move. So if we go to the XRP chart, again, one of my favorites, when we were anticipating a fall from the all-time high, we already knew the 78.6 or the 60 would be hit at some point. So what we've done is we draw the tool from the bottom. It's the absolute top. And one thing you'll notice straight away, this zone is almost essentially a backup zone in a worst case scenario. But what you do notice is if I wipe out this zone completely, forget about the 78.6, look at the 61.8. This correlates almost pinpoint to the support level we drew of around 16.6 cents. Not only that, but when we did finally gain some support, we spiked up, we tested the counter trend, we came down. When we tested the main trend line, you will notice 3 of these candles respected the 61.8% perfectly. Now we've broken through, we've had plenty of correlations. Now guys, if we go to the extension for this, we can see we have almost 55 cents and 70 cents. Now, this is very unexpected. People do not believe price will reach this level. But if the Fibonacci's are being respected on the weekly and on the long-term chart, the long-term levels are very likely to be met. So you have to keep this in mind. Now again, experiment, practice, do what you believe works the best. Always practice on the weekly chart. Now what could happen is, I could do this as an example. I believe this didn't actually work as a valid Fibonacci level. So what happened here was, this did not work at all. That's fine. That just means we can't really find a good entry point. And that also means we shouldn't really try and risk it. If anything, we have to just wait in these scenarios and hope the price will retest this level. Because the way cryptocurrencies work, and I've mentioned this in the previous few lessons also, you are noticing now a slight pattern. No level is perfectly respected. So this doesn't, in my opinion, this does not necessarily count as a Fibonacci bounce, and I would not have actually entered from this position. It would only be once price re-entered our resistance level I probably would have entered. We would have made a bit of a loss in terms of the jump from here to here, but it's all about the confirmations. The last thing you want is price to shoot up only halfway and it just consolidates. You enter thinking this is technically a bounce from this level, and then the price just melts straight down, an instant 20-30% loss. So you have to be cautious, you have to be patient, and just really wait for the weekly Fibonacci to pan out. So now let's move to the next lesson. Again, I hope the notepad has come in handy with you throughout these lessons, and at the end of the day, it's the real-time chart work you put in that is going to pay the biggest dividends. So practice, practice, practice on these charts. See you in the next lesson. So in this lesson, we're actually going to move over to the fundamental side and cover the essential ways to stay ahead of the market at all times. Now this is actually a lot easier than many may think, and it's simply down to entering your favorite crypto into Google. And what is happening now is the crucial news, I'm talking the groundbreaking headlining news, will usually be the first thing that comes up on Google. So for example, if you go to Google, you type in Ethereum, the first thing we can see is 15 hours ago, a post was made saying the Ethereum software sees delay ahead of the Byzantium fork. Now, if we go to the Ethereum chart, we can already see that was reflected in the price with a fall all the way down to $289. We're now back at $326. If we were aware at the time of this news, we would have been able to predict or maybe even get another entry in. So it's all down to how aware and how dedicated you are to staying on top of cryptos. Again, if you're a long-term investor, this is an essential. You do not need to be in and out of the news all day, every day, trying to find good entry points. But if we go to Bitcoin, we can see we are about to see massive disruptions of some kind. The IMF, the International Monetary Fund, is saying it's time to get serious. So again, we can go to Bitcoin. We've just met all-time highs. It's no coincidence the bad news comes out the minute we start reaching new levels. And all this essentially is, this is market manipulation in play. They're already giving us a warning in advance. The price will eventually crash down another large amount. So all that means is we could easily retest to 5,000, or we could easily retest back to 3,000 again. There's no doubt. But that also means we could extremely explode beforehand, completely smashing 7,000. We may even excel to 8,000. The point is, the news is telling you big moves are coming. So it's up to you to read that news and really decipher what it's trying to get across. Now, the problem is, again, without the regulation and without the current restrictions in this space, we're almost in a wild west, where when news comes out, it severely impacts the price of cryptos. For example, if Bitcoin was to have another fork, or there was an error in the system, or they found a code and a bug in the blockchain, Bitcoin would instantly fall in value. When the CEO of JP Morgan did say that Bitcoin was a scam, this is what caused the fall. This is actually what happened. So we reached new highs. The CEO of JP Morgan claims that Bitcoin is a scam. We then fall from $5,000 to $3,000, a drop of $2,000 just off news alone. So you have to be very aware of what is happening, and also keep this as a reminder that just because bad news comes out and price may fall a few %, it doesn't mean it's the end of cryptos. It doesn't mean a crash is coming. It doesn't mean it's going to crash and burn forever. It just simply means the market's being manipulated to prior levels. This is allowing bigger players like the institutions cheaper prices to buy in. So it's completely logical why this is happening. As professional and smart investors, we have to separate the psychology from this and just let the price do what it needs to do. If you see it corrects with your levels, and the problem is, people are not having the correct levels set up. So when the price falls, to them it's completely random. We're giving you the foundation to place these levels and understand exactly where they're going to be manipulated next. So if we go through, Another key example is Ripple. We have the Swell conference coming up. The Swell conference is taking place in exactly 3 days. Ripple price surges 30% as RippleNet adds a 100th member. So we go to the Ripple chart. That is absolutely correct. We did see a gain of 30% in the prior week. The weekly candle is now retested. Again, if you notice, this is perfectly in line with all of our technicals. Now, what is happening in the next 3 days is Ripple is having a huge conference consisting over the period of 2 days. They're going to have some of the hugest financial institutions there. They're going to have banks there. They're going to have even members of the Federal Reserve there. So as you can imagine, hype builds up. So what this means is price is already being manipulated downwards in anticipation for the event. The main investors and the key people who control this market, usually the people who are holding multi-million dollars worth of these cryptos, will drive the price lower. From here, we can anticipate breakouts in line with our Fibonacci and technical levels. So what this means is, for example, Ethereum. Now, when the Ethereum fork does take place, the last time the Ethereum fork took place, we did actually rise all the way to $400. And essentially the original hard fork that happened, that took the technology further and advanced, ready for the next stage of mainstream adoption, completely exploded the price. So every time you know there's an upcoming event, you should be aware of what will potentially happen to the crypto, as it will get very, very volatile. So essentially what I want you guys to do is research into the company, go onto the main website, look at news releases, sign up to newsletters. Again, I sign up to several newsletters from the official company's website. And what this allows me to do is say, okay, there's a conference coming up here. They have an announcement coming in a week. We have upgrades coming to the system. There's another hard fork coming. They've just recruited 7 new developers. We've just got a new website. All of this has to be taken into account, because then you know when this is taking place, you know what exactly is happening, and you can start to understand just how impactful this news will be. And guys, it's all about predicting these moves in advance. So when we're combining this with our technicals, we're always ahead of the game. And again, if you're taking notes the way I hope you are, you will have noticed a recurring theme. We want to stay one step ahead at all times. We want to know exactly where the price could potentially spike. And we want to be comfortable knowing if it goes up or down, this was expected to some extent. We do not want you to panic. Once you have everything set up, you're no longer scared of what may happen because you're already in control. We cannot control the markets, but we can control our mindsets and our approach to how the price moves. Now let's move to the final lesson of this chapter, where I'll help you put this all together and even give you some predictions on what may potentially happen by putting all of our analysis and skills together. See you guys in the final lesson. As we have covered the key principles of technical and fundamental analysis for cryptos, I want to throw in 3 bonus lessons. Now what these lessons will consist of is how to plot key levels in a crypto specific way, even more strategic and even more precise than the levels I've showed you previously. Now the reason I'm adding this as a bonus is because I've been testing this over time whilst creating the course. So instead of just implementing it like a standard piece of technical analysis, this is unique to cryptocurrencies and it seems to work almost every single time. This creates not only accurate key levels, but also a region or a zone to actually test where cryptos may spike to and where price will potentially hit should it hit a key level. As you know, I've said this many times throughout the course, price does not stick to specific key levels. It tends to break by a few $100s or spike and close back within the zone. Now the other lessons will be 3 moving averages. We will then combine these together in the 3rd bonus lesson for an overall entry and market strategy. Now when you combine these together, your precision of trading and entries are increased dramatically. And then when you combine this with the rest of your analysis, trend lines, major key levels, this will give you a major advantage compared to the other investors on where to actually enter and sell and where price may spike to you short term. And as you know, it's all about finding these key levels, guys. We want the advantage at all times. Institutional investors and the market manipulators understand these levels, and there's a reason they go to these levels even when we've seen all-time highs. We can combine it with Fibonacci, breakouts, and it will always go to the expected levels. So the MAs, there's 3. I'll show you these here. Now I will not reveal these till the next lesson, but as you can see, there's 3 MAs which we will be using for this strategy. However, in this lesson, we're going to go straight to the key level plotting. So what we'll do is we will refer to these levels as zones. So we're going to be plotting down zones. And I'll use this firstly on Ethereum, and then I'll move over to Ripple. Again, very volatile cryptos, so it's best to plot the key levels on these. So when you're working with the less volatile cryptos, it's even easier to find these levels. Now, how this works is we use either the horizontal ray tool, which of course, as you know from the previous lessons on technical analysis, will plot from the exact point you place it. However, if you want, you can also use the horizontal line tool and plot these levels down also. For this purpose, I'm going to be using the horizontal ray tool, and if you prefer, stick to the horizontal ray also. Now, the way this works is you first use the horizontal ray to plot the levels on the close of the candles. We do not use wicks. We simply use the body close of the candle. So what we'll do is we'll find these key levels and then see how they work with previous or future price analysis. Now what I can notice immediately is this here, a straight resistance and a straight spike from this level. When price collapsed down, it retested upwards and immediately came straight back down to create new lows. So what we'll do is we have 2 candles on the exact same level, open and close. So here's what we'll do. We'll plot the horizontal ray dead on here. And as you can see, this is an extremely valid level of support and resistance. We've come down, we've tested this level again, we've come down, we've broken through, we've sustained on this level. When we've come back down, we've held on this level again just here. On the way back up, we've had 2 zones here which have just tested, broken up, broken down. The candle was then closed pinpoint on this level before going downwards again. So we can already see that next time we go upwards, this level will be tested again and either close on this level or go straight back up and bounce again. Now, this is accurate, but it isn't accurate enough. And we need to give ourselves and price a breathing space to actually make sense and bounce to. And if you'll notice before I move on to the zone, if I actually push this back slightly, you'll notice we have tested again just here. Pinpoint with this candle here, and huge rejections from this level with all of the wicks shown here. Now, we first go to the candle we done this from, and that would be these 2 candles here. And all we do is we then draw zones from the wicks of that candle from the close of the body. So we're simply adding an extra bit of space to where price could potentially spike to once it hits this key resistance or support level. So we'll simply get the rectangle tool. Now I suggest with the rectangle tool actually making this as faint as possible. You want your zones to be faint but noticeable in colour, and you don't really want to obstruct your price. You don't really want to obstruct the technical price action. So for this example, I will use green. One of my favourite options for analysis is blue or green. So we'll have a nice faded green, just like this. And what we're going to do is we select the tool, we draw this from the very body close and open of the candle, depending on where you've drawn your line. For this example, we have a perfect candle closure. We simply add this zone and stretch it out up to the top and peak of the wicks the candles were attached to. So just there, we've increased this zone now to the previous level. And what this does is, if I actually stretch this out further, you can see we've now added ourselves extra confluence zones. We have spikes and retaliations from these zones exactly here. Moving further down the line, it now makes sense why price didn't just stop here, it actually pushed slightly higher. Coming back down, price broke up, tested exactly here, even opened exactly here, only to come back down and test this level here. We had a rejection here. The spike up and the down was the middle of this zone. From now we're coming down again, and as you know, we may hit this level. In fact, we will hit this level again. And now we know that in the future, we may not just hit this level, but we will potentially spike here before going down and breaking up again. So we can find several more of these opportunities on this chart. For example, here, here, just here. This will actually confluence perfectly with this region here. We can also add this zone here. What I'll do is I will draw all the way back here, and I'll go to some zones here. For this example, I'm going to, and of course guys, just to point out, you don't want zones like this. Whilst it does confluence very well with this here, and it does obviously confluence, this is simply too wide. And you don't want to leave breathing space for price to come here, spike down halfway, but yet you're waiting for a test of this region here, only for price to reverse here and just continue going upwards. They have to be accurate. If you leave the zones this wide, it's almost as if you're presuming and actually just predicting a complete wide span of price. So what we'll do is, we will now draw a zone of support. We have a resistance, let's find a key level of support. And I can see that immediately from here. Now, again, I want to stretch this back, so I'll draw this back just slightly. Perfect. So we've based that off these two bodies here. We will then draw this zone here. Again, even that is quite wide in my opinion, so I'm going to keep it to this here. And then what we'll do is we'll simply stretch this out like usual to the close of this wick. We'll then increase this ever so slightly down to the exact pinpoint of the line. So we now have a horizontal line, and as you can see, a highly accurate level of support and resistance, with spikes testing exactly within these zones, both times up and down. Several spikes twice here. So we now have a zone where we can spike upwards to and potentially break up and retest, or break down and test this level again. So when you combine this with the horizontal lines that we have placed, for example, horizontal line here, you can even drag that down slightly, horizontal line here, another horizontal line just here. We now have intraday levels and where price can spike and be manipulated to work alongside our overall long-term levels. We could even extend the long-term level to down here. As you can see, several tests of this region. These are nice wide zones to actually give ourselves profit-taking targets, just like we covered in the profit-taking strategy. However, in the meantime, and to give you ease of mind during intraday spikes, at least you know where price will go to. This always keeps you one step ahead, guys. Now, let's move to XRP just for another example. As you can see, I have the MA set up and everything already set. However, for this example, I'm going to remove these. We're going to hide the MAs. I'm going to remove this. We're even going to remove the trend line. Now, what we're going to do is we're going to apply the ray to the already preset levels we have for XRP. So if we want to find a nice intraday zone, we'll go straight to this region here. Again, you can see the confluences already, just underneath these candles here. We'll put it to the candle close here. Now all we need to do is we need to get the zone again, we'll draw it here, just draw it straight to the underside of the wick. Now all this does is you can see now when price comes down, we've not only hit exactly on this line, but we've had body closes all within this exact region here. And if we go closer, the candle closed here, we then tested twice from this zone. When we've come up and down again, we've hit exactly in the pinpoint of the zone. The spike up to the zone did not hit exactly on the line we drew, but it did land within the range. This still means to us there's a possible resistance level. Again, confluence after confluence here, guys. So we can already predict when the next spike upwards comes, we can expect this zone to be met again. Now we'll add one more to this region for the sake of visibility, and then we'll move on to the moving average lesson. Now for this, it's going to be just above these two here. So as you can see, a key level, loads of confluences, so we can drag this back. We now have pinpoint accuracy here, all throughout here, constantly bouncing between these levels. However, when we add the rectangle tool, things get slightly more interesting. We can increase this to here. We now have extreme accuracy on all levels. Increasing up to the wicks of these two bodies means we have perfect confluences here, a perfect test there, pinpoint here, spikes through here, a body closure right there. We have candle closures left, right, center, 2 wicks spiking here. We even have another test here, pinpoint on these levels. And all we're doing, guys, is giving ourselves the opportunity to understand where price is going to be heading. And it makes life easier for yourself. And you can confidently say you know where price will be heading in the future, or where it may retest to once a breakout happens. Now guys, it's as simple as that. We can combine this with example a trend line. Again, test after test after test, we can spike down from this trend line. And it's as simple as that, guys. We're just giving ourselves confluences, and when we combine these with the moving averages, we're finding the most accurate breakout levels and retest levels we can possibly find. So whilst it is extremely hard to predict where cryptocurrencies will be heading, we are now putting the odds in our favour more than ever. I'll see you in the next lesson where I break down and reveal the secrets to the cryptocurrency moving averages. See you in the next lesson. So welcome to the final lesson of this chapter. Now what we're going to do is we're going to rerun through F, Ripple and BTC. Because we've already set up these pairs, we're going to break them down on the daily chart and just get a little understanding of how we're going to put all of this together, as the aim of this lesson is to use everything we've learned into one big piece of analysis. And what this means is we can now get an understanding of what's going to happen potentially in the future. We can look at key breaking points, key reversal points, and then we're going to put all of this together on a Litecoin chart, which is currently completely blank. So we start off with the Bitcoin chart. We've added our Fibonacci on the weekly. We do know there is a potential fork coming, and last time this happened, Bitcoin soared again in value. So with this in mind, we can take into consideration the target we have for 7,000 may not be too hard to reach after all. So what we'll consider right now is we have broken out. We're on the weekly chart. The Fibonacci has been respected. We've retested the first level. Now what this necessarily means is we have 2 options from this play. We could either retest down to 5,000. We could spike straight up with no real retest to 7,000 and then retest back down. Or we could just completely fall to another level. And what I mean by that is, if we now draw the new wick to wick, we do actually have some levels here. We have a 61.8 and a 78.6. So instead of drawing lines, which we already have, I will actually, in fact no, we can do it this way. We will draw lines. And what we'll do is we'll then convert these into zones and remove the Fibonacci. So we could have another short-term spike here, or we could actually break through 7,000 and hit 7,600. So what we'll do is we'll go down to the daily. We now have our 2 new zones, and if you look, they correlate perfectly with support and resistance zones. So what I can now do is, I can already see we had a breakout here, we broke up, we soared upwards. So what we can actually expect potentially is another similar play from this height here. So what I'll do is I'll get rid of this. I will now make a zone from this level and remove the lines. We'll make this blue. No, we'll make this green, a bit easier to see. Really fade that out. Then we just fine tune this slightly. We can put that to around there. Get rid of this. We can now do the same below. Do that from around there. We now have 2 key zones of reversal. So again, it's good to have these zones set, because what this essentially means is if price does reverse and break your main level of support and resistance, which are the key levels we have drawn here in black, should price break these levels, we now have zones that we know are very, very likely to be tested. So what I have noticed, again, just right now, is this. We have a trend line forming. So now it's starting to take shape. So what I can potentially see right now is Bitcoin reversing We have two options. Could hold here and retest straight upwards, which would correlate with the broken resistance turned support. However, what could happen, we could have some consolidation, and we could actually consolidate all the way to this point here before exploding upwards straight to 7,000. With the current momentum this has from the breakout, I actually believe the first play is more likely to happen, which is more like this. Again, no one knows right now, but judging from the momentum and the fact we're still trying to push back to this level, the momentum is extremely strong. So what I can now do is zoom out slightly. I can get the Fibonacci tool. I can draw it to where our correlated zones are. And all we know is, should there be a bad news release, one thing I have in mind is we have just had an announcement that Russia have confirmed they will be regulating cryptocurrencies by the end of this year. Now, if that happens, this happened with China and the price absolutely melted. So again, these zones we have marked here, these are key levels that could be tested for manipulative drops, especially when bad news comes out. So if bad news comes out, for all we know, we could easily spike up here and just melt straight down to one of our highlighted zones. But the point is, we have these set, so we already know what is going to happen. So how I normally view the charts nowadays, I don't really use the daily on a regular basis. I actually stick to the weekly. Because we're holding our investments long term, we're always just waiting and waiting for our final target to be hit. Once 7,000 is hit, then you can take some profits off the table, and whatever else happens in the meantime is all just fluff. Because at the end of the day, we're still in a very early space and everything is new. We're not essentially going to crash and destroy the whole market when we've only just begun getting, we're not even at the level of mainstream adoption, in fact. So what this means is these targets will be met. The problem is getting there is the trouble. We'll have a loss of volatility, a loss of spikes, and a loss of hectic behavior. But what we've done is we've set the zones, so whilst we're waiting for the climb up to our level, when a drop happens, should it hit this level, which was the 61.8 on the daily, we can now stop, we can buy some more. This fits in with the dollar cost average strategy, where we buy and buy every time the price dips or even goes higher. Because we're doing this for the long term, it does not matter where we get in. The point is we keep on adding entries at great prices. So when this happens, we will be expected, we can expect to crash to this level in a worst case scenario. If not, we will be expecting a retest of 5,000, a potential retest of the trend line, and then a straight spike to 7,000. Let's move to XRP. The levels were already set, so all we need to do is just evaluate this quickly. We're on the weekly chart. The trend line has tested perfectly. It's bounced straight from the 61.8% Fibonacci. This confluences perfectly with the trend line, the 16.6 cent support. We've smashed through the counter trend. We've now retested the counter trend, and we could actually say we essentially have a new level of resistance. The fact that price fell straight from this zone. So we can go to the daily. We now know that now that we've retested this counter trend, we've retested a new level of support. We now know where our long-term targets are. We have 55 cents and 70 cents. We now do not need to worry what happens during this process. All we know is these levels are expected. The price has fulfilled our analysis. It's worked to an absolute T. So we do know it will continue down this path. So when we go to the daily chart, zoom in a bit more. And what you can see is it's a very, very large rise to get to 55 cents. So when you look on the daily, we've smashed through, we've retested the counter trend, again, the confluence with the support level. We have just formed a new resistance level, which does correlate perfectly with prior price action. So all we'll do is go back to the weekly. If you want to correlate and check if there's any further Fibonacci's, you can. However, the likelihood of this being met is not too strong right now, as we have just broken key levels. If this does happen, we do not want to leave our chart looking like this. This is messy. So what we'll do is we'll get the zone tool, the rectangle tool. We'll draw a zone. We'll delete the Fibonacci and clean up this chart a little bit. So what I'll do is I'll get rid of this. I'll actually get rid of this as well, as we now have a new level of resistance. Chart's looking slightly cleaner. I'll now go back to the weekly. So now I know, should the conference that's coming up in 3 days provide some bad news, we have the 61.8 and we have another zone that we have just drawn in a worst case scenario. Now we sit back and we wait for our analysis to be met. When we move to F, again we have the Fibonacci set. The 61.8 correlates perfectly with the $200 zone. We're respecting the trend line. We're on the weekly chart, remember. We have retested 400 twice. Now Ethereum will be having another hard fork soon. We will take into consideration the fact price soared completely last time this happened. We now have 2 new levels we are expecting to be reached. We have 472 within this zone, and we have 579. Now what we can expect with a breakout from the previous high, because this level was so heavily respected, a breakout will absolutely soar the price to these new highs. Now these levels are set, we're ready, we're anticipating. We have every single support and resistance line in the crucial areas established. We have a counter trend again, which is just broken and we covered in the last video. It's broken. We are now at the final stage of the uptrend. So what this means is we've broken the counter trend, we've retested the trend line. Our resistance levels are being broken by the day. The only thing that's remaining is some good news, and a surge will absolutely send us forward. And because we know this news is coming out, we can anticipate these new highs. So what we'll do now is we'll move to a blank Litecoin chart. We're going to do this analysis from scratch. So first of all, we'll start off from the monthly, as Litecoin actually has plenty of data to analyze at least one level from the monthly chart. Now what I see already is a huge manipulative spike, and this zone can be marked instantly as it has been respected twice. We now have this level here. We could do this, but it doesn't respect as well as this. We can always fine tune this on the weekly and daily. We now have another level of manipulation. A huge spike at $65. These zones are now marked. For me, these are the key standout levels. We do have this zone as well actually. It may not be too crucial, but when this zone is broken, and you'll see this clearer on the weekly and daily, this is what will trigger the move to $100 plus. So let's go down to the weekly. So once we're on the weekly, you can see this level was perfectly respected. 1, 2, 3, 4, 5, 6, 7 times. Now remember the fact that levels do not have to be perfectly hit to be considered as a retest. So we have had the full spikes several times. So when we move back to the current price action, we can see these levels are really working. But one thing I will do, I will actually increase this slightly, just here. And what we can start doing now is we can start drawing the lines in between and the zones. So we actually have a weekly zone here, which is crucial. Leave that there. We do have another zone which we're currently at, although I do not consider this a zone yet. So we do have the weekly chart here, and I will actually increase this. Now we're on the weekly, we can see slightly clearer. This is where the real reversal happened. And from here we spiked up, we reversed perfectly. Price failed to close above this level 2 weeks in a row. We sunk all the way to $35. This level being crucial, as this is where all the buy orders are set, which sent the price slowly back up to its previous high. So now when we go to the daily, we can see the level we drew was a perfect level of resistance turned support. So not only have we respiked from this level, but we've actually held this level as a support. The candle closed all the way back up where we expected. We then retested again, and we've now broken slightly above, and we're starting to make new highs. So what we'll do is we'll highlight a new zone just here where the price spiked from twice. We're now consolidating around this zone, but it looks like we will actually be closing on this zone. And if we do close above this zone, we can expect $65 to be met. So what we'll do is we'll start to notice another trend line. trend line here, 1, 2, 3, 4, 5, 6 retests. So I'll actually extend this further, as you cannot get a more valid trend line than this. In fact, we even have the main manipulative spike taking place and closing back on the trend line. So what we're starting to do is we're building a structure, and we can start to see what will happen next. Now this region here is just an empty zone. For me, there may be this here. This may be another level, but it doesn't seem strong enough to actually sustain. The price action here was way too quick to consider a key level of support and resistance. So what we can do is we can highlight this zone as a potential. What I'm actually expecting now is go to the weekly, can actually get a nice long-term Fibonacci drawn here. And what we can see is that does not work. So what you do is you drop this down to here. We then slightly increase and play around with this. Go to the monthly. Because this is a long-term chart, this does make perfect sense. We do not need to use the weekly. Move this out of the way. So what you're starting to see is the 61.8 was perfectly in line with prior levels. We've spiked this level twice. So now when I go to the daily, you can see the 61.8 was a previous level of support. Price has now spiked through one final time. This level has been proven valid with prior price action. And with the Fibonacci tool, we should always look at how it respected with the previous price action, whether that's several days, several weeks, or several months. This helps you confirm this is a valid level. So what I can now do is add another Fibonacci tool, just to give me a short-term insight into what could be happening. Now, one thing I should mention is if you notice now, this does not work. So what I'll do is I'll put this straight here to the close of the candle, the actual body. The wick to wick does not work. We can see that by dragging this down. It's not valid whatsoever. So by dragging this to the body of the candle when it closes, we can see we have the 78.60, which is the main level. So should we spike lower, we could see 51.50 cents met again. This aligns perfectly with our trend line. And what we can now do is we can start to eye up where the short-term targets will be heading. So we can already see that $65 is perfectly in line with our next resistance level. And the second target is in fact exactly where we drew our zone. So $71 could be an initial target, but I do believe when it hits this zone, due to the weakness of the support level and the resistance levels, we could spike straight through to $80. So what we'll do is we'll switch to the weekly, get rid of this, get rid of the Fibonacci. We now have a nice clean chart. We can even get rid of this on the weekly, but to be honest, we'll keep this for now. So what we'll do is we'll start eyeing up the long-term levels because we do not want to worry about daily fluctuations. The fact is we have $120 here. We have $100 and almost $52 here. All we need to know is the main long-term Fibonacci's are set, the levels have been respected. We can now anticipate huge upside breaks to these levels. The main concept now is we sit and wait. We wait for the news to come out. We stay on top of the news because the news gives you the crucial time to when the potential breakout could happen. For example, if news was to come out around October the 11th, October the 20th, my apologies, this would align perfectly with a trendline retest and a support level retest. So what would happen is we would break through, we would retest the support and trend line. The news would then accelerate us to new highs. So all of this has to be taken into account and help us build an overall image of how these charts work. So hopefully now you can understand that do not fear. For example, when you see a full spike of a level not perfectly retested like here, it does not mean the levels are not valid. It just means markets are being manipulated because they're trying to sucker in the people who are used to the Forex and stocks analysis. So guys, that is the end of this lesson and the end of this chapter. We're now going to move on to how to actually buy and sell the cryptocurrencies and how to navigate through exchanges. See you in the next chapter. Hi guys, and welcome to the second part of the bonus lessons. Now, many of you have been asking me what moving averages do I use, and I did say this would all be inside the course. And during the duration of making this course, just like the rest of the lessons and just like the first bonus lesson, I have been developing this strategy and working on it over the past few months. So I'm happy to say I can put this in the second bonus lesson. Now what we'll be doing is, first of all, I'll be explaining how the EMA works. Now there are two ways to utilize the MAs. One is for trend direction, which means filtering the overall trend. And the second reason is to utilize an MA crossover in line with any of the other trade setups and technical levels to help us get even more confluences for an entry and exit. We will start off with the crossover strategy and what MAs are needed, and then we will add the trend filtration for maximum accuracy. Now we'll start off by adding the EMA and the SMA. Now the blue EMA is the 8. You can see that here. The length of this is 8, and we apply this to the close of the candle. We then go to the moving average, which is the SMA, and this will be the 18, and this will be red. And again, we apply this to the close of the candle body. Once this is selected, we can start to mess around with this and see some of its real use cases. Now, because this is a very shorter period, so the length is an 18 and the length is 8, this means there's less data constricted and applied to these moving averages, meaning they're much closer to the actual price action itself, meaning they act as very good levels of support and resistance on the daily and 4-hour time frame, potentially also below. However, I will stick to the daily and 4-hour for this purpose. Now, the purpose of these MAs is to utilize an MA crossover in line with a technical level, a Fibonacci bounce, or any other trade setup you find. By awaiting an MA crossover to either the upside or downside, we give ourselves a high accuracy and high predictable opportunity to time the market in whatever direction the MA crosses over to. So for example, right now we have an amazing moment on Ether, a great potential setup right now, where we're potentially looking to cross over to the upside, and in fact we actually have just crossed over to the upside right now. Now if I zoom in, you can notice just through the gaps of these candles we have crossed over to the upside right here. Now this means the downtrend and correction has ended, and we are looking now to apply some key levels in line with this to find the ultimate long opportunity. So what we can actually do here is we can get the horizontal tool and we can apply some key levels and really get this in line with the moving averages. Now we can already see we have some high highs and higher lows. We've now tested this level after correcting from testing another high. So we fell down from this level here. We've tested this level twice. The first time we pulled up, we hit the 18 SMA, we pulled back down, and we failed to break above. We've now broken above the EMAs, they've crossed over to the upside, and price is now consolidating right here in this zone. So what this tells me is we found a new leg of support. We're now slowly building up momentum from upside breakout. So we can easily eye up from this period here, the 339 level. If we drop down to the 4H, you can see this even clearer. And this is where we fine tune our entries and really find the maximum probability entry. As we can see, we're looking at this retest in a much closer time frame. We've pulled up, we've broken through the MA here. We've come up and tested a new high. We've hit the resistance level. We've pulled back down, but yet we've held not only on the support level, but the MA here has also held as support. Just as you can see here, the candle closed pinpoint on the 8 EMA. We've then bounced up again, slowly correcting and testing on these MAs before breaking down. We've then touched the MAs all the way down, holding as a resistance trend line. We've then broken up. The MAs have finally crossed over to the upside again, and on the way back down we've retested these MAs. So if we go back to the daily, we can easily see now we are looking to start making highs again and slowly move away from this support level, which we have been testing for a long time. So if we go to XRP, we can apply both of the EMAs again. The reason I choose Ether and XRP is due to the volatility and the way they respect the key levels. Not only the key levels, but the moving averages and the Fibonacci's. This makes it much easier for someone who's new to the market to actually pick up these skills and start to learn how to apply them. So what we can see here is, we'll start from the initial breakout of XRP. What you can see here is in the very beginning of time, the MAs were consolidating. We had a lot of movement. We were stagnant. We were stagnant for years. We finally crossed the MA to the upside. We then started holding this MA, in particular the blue 8 EMA. We began to hold this as a support level. And as you can see, we barely broke below this level. And when the real uptrend began, we started to find nice levels to continue entering as price corrected and went straight back down to the 8 EMA. As we go up, we can see price just really gently supporting this level. Even when breaking through, we ended up having a slow curve, slowly respecting this level. A breakout below did happen, however the spike back above did close on the supports here. We then continued soaring higher, each correction and candle close slowly brushing against the MA. This eventually took us to all-time highs and a growth of 4,000%. Every step of the way, guys, there's a test there, another test there. We've come down, we've tested twice. We've then finally broken through and began holding as resistance instead of support. We then knew the bear trend was coming. The MAs had finally crossed over to the downside after 3 to 4 months of pure upside momentum. When the MAs cross to a certain direction after an extended period of time, we can start to identify not only key levels of exiting and entering trades, we also know the trend direction is beginning to shift to bearish or bullish. As you can see here, we slowly consolidated down. However, we're holding as resistance the whole way down, guys, and breaks above always seem to still support this level. So as you can see, overall, we're looking at key crossover points to utilize with our trade setups and get the perfect entry level. So right now on XRP, we can look at this here. This has now repeated itself twice. We've broken up, we've come down, the MA's crossed over and we made new highs. We're now repeating the exact same cycle. Price has been falling down, we've been holding as resistance. We now zoom in, we see we've broken through this level. We've come back down and we're now holding as support. The current candle was also broken through this level and also broken the 18 SMA. What this means is once we sustain above this level and the 8 EMA becomes a support level again, a crossover should happen, and this will confirm the launch to new highs, if not at least the previous high. However, I have been analysing XRP for a long time now, and this could be the final launch before new highs are made. We're looking at even 34 cents for the next run. So what we're going to do now is, you know how to identify key points of entries and exits, profit taking zones and entry zones. We're now going to combine the new addition to the EMA strategy, and this is the 200 EMA. Now we have these two EMAs for the crossover. We're now going to utilize trend filtration in line with this to get the maximum accuracy we possibly can. So we'll go back to Ether for this example. So if I click on this EMA here, you'll notice we have the 200 length applied to the close. All we do is we simply untick this, as I already have this set. Now this is a much longer time frame and takes account the past 200 days worth of data, not just the 8 or 18 days. So as we can see, we have a much larger range of price data calculated into this MA, meaning it's not as volatile and does not stick to the price action itself, meaning it's much more stagnant and a perfect way to gain the overall trend bias. My favourite thing with the 200 EMA on either pair is the way it holds as a perfect level of support for the long-term spikes, manipulated spikes down to random levels, which would not make sense unless you had the 200 EMA set up on your chart. So as we go here, we start off from the very beginning of time. where Ether finally started exploding in value, breaking all-time highs and exceeding to $400. Once we broke the curve here, we came up again, we came down, we not only held the MAs as support, they crossed to the upside. We then held the 200 EMA as support, before slowly exploding in price. And what happened is we did not test the 200 EMA for almost 3 months. However, we then had a manipulated spike from $93 all the way to $25, and seemingly a completely illogical level only tested exactly on the 200 EMA. We then spiked through this price slightly. We then spiked all the way back up in the same trading hour. We then continue with our uptrend. We then experience a huge crash of 60%, falling all the way down to $135. And with no coincidence, we hit pinpoint on the 200 EMA. The minute we touched this level, we spiked all the way back up and continued our next reversal to the upside. We then collapsed again. Price fell all the way down, not only to a key support level, but also pinpoint on the 200 EMA yet again. Again, the minute we hit this price, we then correlated this with the support level. We also had a zone placed exactly here. We then add the Fibonacci. We then see we've not only tested the 78.6, we've breached a support level, we've touched another support level, we've then hit the 200 EMA. Since then, price has carried on spiking to the upside, creating new highs once again. We're now stagnant and consolidating on this zone. Price is about to break out, but the best part of this is we know whether there's new highs or not. A manipulated spike to the downside, we can calculate in line with key levels to know exactly where price will go next. So for this example here, should price spike up here and then continue to crash down in a large case of manipulation, we can put this level in line with here. So we can put that there, and we can imagine in a few days time or in a week's time when price has already gone up here, this EMA would be here. We can then calculate a spike down would at least possibly be within this region, which we can then apply with other key factors such as this, a key support level. We then see as the slow growth of the 200 EMA continues, it lines up perfectly with a support level and also exactly where we could potentially retest before continuing higher. This also applies exactly to XRP and is almost the exact same case, where the 200 EMA acts as perfect support the entire time. Same as Ether, once broken up, we did not test this level for months. We then see price went all the way from a bull trend, it fell all the way to a downtrend, and during this downtrend, the only time we actually found support was on the 200 EMA. We then reversed immediately off this level, never closing within this region. After consolidating for a few days, we had a final test of the 200 EMA and spiked all the way to the top once again. Price continued down. We then had 2 more spikes of this region before breaching up and doing the same yet again. We can now combine this in line with the MA crossover, another test of this support level. We have failed to break below this level. Should we break below the 200 EMA, we know we are now going to potentially be in a bear trend, especially for the long term and the upcoming months. The way this works essentially is if you're above the 200 EMA, you're always in a bullish trend, and generally price is going to continue higher over a longer term period. The minute we breach below a 200 EMA and start to test this level, from a resistance perspective, we know we're potentially about to fall into a long-term downtrend. Now, I have to take into note this only works on the daily and weekly. However, due to cryptocurrencies being so new, it's not necessarily possible right now to actually get the data on the weekly chart, and that is because there's not enough data even spanning back 200 periods. There isn't even 200 candles on this chart. So we can stick to the daily for now and take use of its high accuracy. And what we can do right now is anticipate this and combine this with key levels. So in the next lesson, we're going to combine all of this with the plotting zones, the Fibonacci, the MA crossover, and then we're going to apply this into the final crypto construct, one of the most powerful tools I've been developing for the past few months. By applying these together, guys, you're putting the odds in your favour, and you will likely never miss a trading opportunity. This can easily increase your trading tenfold and increase your profitability by 90%. I'll see you in the final part of the bonus lesson. So in the previous video, we done top-down analysis on the FUSD pair. Now it's time to break down this pair even more and find some structure through counter trend lines and trend lines. Now again, another common misconception between investors is that the trend lines work exactly how they would with Forex and stocks, and this is far from the truth. And this is again on a case-by-case basis. Every crypto that you look at will work in a different way with trend lines. This means it can sometimes go from wick to wick, or if not, it can be the complete opposite. It could be from the body of the candle to the wick of a candle, or from the body to the body. So it's really hard to actually determine how to do this for each pair. So what we're going to do is we're going to break this down for you in a very simple way. So if we go first to the weekly, every single main trend line, not counter trend line, but actual trend line, will be done on the weekly chart. That is because on the monthly chart, we currently do not have enough data or candles to really get a valid trend line going. This is because the market is so new. There is no real other reason. So the weekly is just about enough to give us a decent trend line and get a real insight into the current trend we're following. What we would do for the FUSD pair, I can already see a nice trend line forming. And what you will notice when I do this is this will not actually connect the dots very well. So you can see we only have two connections. We have the wick, we have the other wick, and then we have the connection here. Now I could easily do this, and it doesn't really make the connection valid. If I go down to the daily, you can see this does not make sense whatsoever. So if I was to adjust this on the daily, and then move this to the body, we would completely rip through the chart, meaning there's no real valid trend line. So what you actually do is you fine tune this from the wick to the wick, and you just extend this out like that. Just because this part has not met yet and this data has not touched the line, it does not mean it's not a valid trend line. And what you will actually notice, and what you may have been a bit considerate about, is this here is in fact another trend line retest. And what happens in cryptocurrencies, which catches a lot of people out especially, and this has just taken a few years to realize, guys, what happens is we will spike down, we will come towards the trend line, we will break through it, sucker investors into believing we have now broken the trend line and we are going to go lower. However, the price then spikes down, hits another key level of support, and then we retest upwards again. So just because it's not a pinpoint test, it does not mean we have not retested. So as you can see here, we actually have 3 tests on this trend line. And straight from this bounce, we did in fact begin to make new highs again, and we are slowly reaching the $400 handle from this region. So it is really important to set these levels from the weekly and just get a good understanding of where the price is going. So we go back to the daily. We've now identified this, and I will show you another example in a short second. But first, we now need to identify the counter trend lines. So, slightly adjust this chart, and again we can see a nice counter trend already. Now what you'll notice is if I do wick to wick, it doesn't really add up. You can just about do one there. Again, a valid breakout actually. This does work, but how it would normally work in this situation is you cannot be afraid to just really get the bodies and the candles involved. And what that means is you've got the trend line here, the counter trend, test, test, breakthrough. We've tested the trend line, we've broken up and retested. And as you can see, the way the candles have respected the counter trend shows that this was the valid trend line after all. Whereas if you were here, you would have had to wait an extra maybe 2 weeks just to really catch the breakout. So again, you have to just lower this down, really work around with this, see which levels respect the most. What you can see here is if we had caught it from this point and then the retest down here, we would have in fact made a lot more money. So it's all down to getting these levels absolutely correct, which is crucial. So if we delete this, we can notice another line has been formed. To extend that out to here, we're already seeing potential levels ether could reach when we extend this out. So if we continue extending this up, we do know in the future this could be a key level to be tested by ether. And again, this does almost correlate within the $450 region. So once there's a breakout, we could easily identify where we may potentially be retesting from in the future. So it's all down to just playing around, seeing which levels work best. Don't try and wing it. There's no point going from wick to wick and expecting it to work just like that. As you can see, it doesn't really make sense. We could also identify this one here. Just like that. So we've actually broken through that candle and we've put a line straight through this, and that does not mean it's invalid. So again, we've gone up, we've almost tested, we've retested, hit the trend line, broken through and retested again. So it's all down to how you actually view this and experiment with this. It does take a long time, it is not easy to identify, but eventually practice and practice, guys. Once you get the hang of this, you're just building this foundation, so just everything the price does makes sense to you, and it's almost premeditated. Everything we do in cryptocurrency has to be premeditated. You have to know, for example, you'll break this counter trend, it will go upwards, it will hit your next resistance. You then know it may go to the next level of resistance, just $100 higher, and then you know when it retests, your trend line is perfectly placed. So you know it will correlate with the support and the trend line. You then think, okay, I have another level set at $400. Price could easily hit this region. And this is what people are failing to realize. And it's just causing a lot of downfall for many. So really take this section into account, really practice, and just get those lines perfect. We'll use another example. Again, one of my favorite pairs for counter trends is actually XRP USD. That's because we'll go to the weekly, can set one here, and straight away we have a nice trend line. We have a test, we have another test, we have a spike through, we have two respected weekly candles just here. So if you go down to the daily now, you can see the perfection of these levels. So that's literally from the beginning of time and before the initial 4,000% surge. So you can see this is an extremely long-term trend line, and it has been respected for an extended period of time. Now, when it comes to counter trends, we have just broken one of the key counter trends, and this is essentially what's going to send XRP absolutely soaring to the $1 region. So if we set this here and we extend this all the way down, you will notice we perfectly it broke out. All of the levels were met to the T. We respected the support, broke through, retested the counter trend. But not only did we retest the counter trend, we also retested the support level we had set up for almost 3 months. So guys, again, very short support and resistance levels. Keep them short. There's no need for wide support and resistance levels. It does not work that way. So again, have a little look at the XRP chart. Have a look at the F chart. The current charts at the moment, especially for these two, they have some great opportunities to practice with trend lines and counter trends. So now it's time to move to the next lesson. Please guys, take notes and make sure you study this lesson hard. See you in the next lesson. So you've gone through the entire chapter on technical and fundamental analysis. Now it's time to apply every single lesson into one single chart and one single breakdown on 3 pairs. We're going to be combining everything you have learned over the past chapter, including the bonus lessons, which means we're throwing in the zones and the moving average strategy into one overall dynamic chart structure. We're going to be applying this on Ether, Neo and Litecoin. We'll start off with Ether. So firstly, we're going to go to the weekly chart to gain an overall understanding of where the key levels are and where we're seeing the main levels of support and resistance. And to do that, we will be using the horizontal line tool to plot our key levels. Now we can already see the candles here, both bodies closed pinpoint on this level. This also correlates perfectly with this retest here before pulling all the way down. So we already have a key level of resistance right there, and this is actually the barrier which is going to make or break the climb to new highs. We then get another horizontal tool, and we can start to add around 3 to 4 levels. However, ideally I would stick to a maximum of 2 to 3 for starting off. You do not want to overcomplicate things. So we'll go down to this level here, and we can set right here another level. We can set one more level just here. This now correlates perfectly, and remember, there's no such thing as equal lines in cryptocurrencies. They do not have to have an equal symmetry. And now this is done, we can identify there is a trend line. Now this isn't always the case, but it does work in this scenario. And what we'll do is we'll draw it from this break here, we'll connect that here, and there we have our trend line bounce. Once we go down to the daily chart, we can start to perfect this slightly better, just to make those confluences a little bit cleaner. We'll then break this down to there. We correlate here. Remember, this was a false spike. The real trend line is right here, as we can see due to the correlation with all of these other tests. So now we have our trend line, we can see we're in a nice uptrend. Higher highs, higher lows. For the current time being, we're trapped in a range-bound market. However, overall, we are eventually climbing higher, and we are making our way slowly towards the breakout point of the trend line and the resistance level. And we are still waiting to break this level to obviously continue to all-time highs. So what we can do now is we can actually start plotting the intraday zone levels. Now you'll recognize this from the bonus lesson. So all we're going to do is identify key levels of support and resistance for intraday trading purposes. I can already notice 2 bodies closing pinpoint here. So for that, I'm going to set the horizontal ray tool. Remember, for the weekly perspective, we will add the horizontal line. But when it comes to plotting intraday levels, we will be using the horizontal ray. Simply set the level here, and because it's based on these 2 candles here, I'm then going to grab the rectangle tool. I'm going to leave this a nice grey colour so it does not affect the chart too much. We will then drag this from the beginning of the horizontal ray, and we will extend this all the way across the chart, finally matching this up with the wicks of the candles here. And there we have our first plotted zone. We can send this to the back to allow the candles to show more clearly. Now what we can see is we have a clear level of resistance. We've spiked here, fallen down, tested, gone up, we've consolidated, we've then tested pinpoint, we've come down, we've tested again, just like you saw in the plotting zones level. We've now tested this zone again, and I actually mentioned this in the previous bonus lesson of plotting zones. We then spiked up, we've hit this level, we've pinpoint closed here, and we've now spiked down again, creating a new higher low and potentially going to roll over and touch the trend line. However, we can spot several more for intraday trading opportunities, and that would actually be right here. Again, I'm going to be using this for this purpose of the video. The horizontal ray correlates perfectly with the 2 bodies here, and also correlates with the test down towards this level. I would then draw a zone to correlate with the wicks of this candle, going to the very high of the wick. We can then draw that there, send to the back, and have a much cleaner layout for our charts. Now, as you can notice, we've tested all the way throughout this region, pinpoint accuracy with every single wick we've tested. Even the test down here has landed pinpoint on this zone. We can now see this is a valid level that price could spike to in the future, and due to having several levels plotted here, we do not need to put any more, as it will really make the chart messy. Now we need to start looking at an overall structure and how this could potentially give us a nice setup. So for this, we will turn all the MAs to visible. We have the 8 and the 18 EMAs and the 200 EMA. As we saw in the previous lesson, price has tested this 200 EMA to absolute accuracy, and it has been acting as a support level for a long period of time. So when we zoom out, we can expect a previous manipulated spike to take place. Now, should price be manipulated downwards, we can expect it to correlate with the 200 EMA once again. Now, let's look for a breakout opportunity and a nice buy opportunity. So first of all, we have the Fibonacci setup. Remember, the Fibonacci should always be on the weekly and daily. For this example, we'll start off with wick to wick, and then we can adjust from there onwards. So as we can see, this correlates well with the support level. The 78.6 also correlates approximately with another support level. However, this does not fit with our current trading pattern, so this means this level is not valid unless we continue to break lower, which is very possible. However, we have already set the support level there, so this does not matter too much, and we need to focus more on the intraday and the current present trading levels. So we can drag this up to the body of the candle. We can drag this lower, and again we see this does not correlate with anywhere. So what we do is we drag this back up to the wick. We now have a more valid level which correlates with previous supports here. However, I'm not satisfied with waiting for this to be tested. So what we're going to do is going to drag this up to the next level. We can then drag this down to the body of the candle. And just like that, the next leg has perfectly correlated with the support level here. Now, unlike Forex and stocks, where a simple wick to wick would cause an immediate retest level, this does not work in cryptocurrencies, and it is never based from the low to the high. It can actually be intraday swings within the A to B pattern, from the A to the B, that actually are the real valid levels. And as we can see, a perfect test of this support level here does show this is in fact the valid 61.8. And when we look from here, we can see we've tested this level twice since making the A and B formation. So the C extension has also been fulfilled. So we can now start looking towards the Fibonacci extensions for our next targets. Now what we would do in this situation is you can either draw a horizontal line here in line with the Fibonacci extensions. You could also draw the horizontal ray and again replicate the same method, which would be this with the horizontal and rectangle tool. Again, we have a nice zone. This correlates well. It matches the chart pattern. However, I do not want to do this for the time being. I actually want to do the same thing, get the rectangle tool and draw a zone to match where the Fibonacci extension is. So the Fibonacci extension is in the middle of the rectangle. I would then apply this to the nearest valid wick and also apply this to the lowest of the wick, which is these two wicks here. This for me is a more valid level of potential resistance for when we spike up to the next leg. I always set my targets in green, just to differentiate from the lower support and resistance levels down here. Again, center the back and make your chart look slightly cleaner. Now from this point onwards, we can remove the Fibonacci tool and keep our chart looking slightly cleaner than usual. Now what we need to look for is we've tested from the Fibonacci, we've pulled back from resistance, however we've created a higher low, 1, 2, 3. The MAs have in fact crossed over to the upside once again. So we can look at this, and from a logical level we can see that price will potentially close back within the red EMA here. So the 18 EMA is looking very likely to actually hold as support. We have spiked lower, however we have not broken this region here. We can represent this with a rectangle just for the video purpose. We have not broken this zone. We've tested up once again. This means buy orders are accumulating in this area, and I can now look at this with a clear eye view and understand even a spike down to here does not mean we are reversing. It simply means we're going to be reversing back to the upside once a manipulation has happened. So I can remove this as I do not need it. I already know in my head this level is a represented support level. Now if you like, you can go to the 4-hour chart just to get a bit of an understanding on what is going on. Now as you can see, the 200 EMA has been holding as resistance for an extended period of time. Now all this tells me is, after loads of false breaks, we've finally broken above. We've hit the next region of resistance, we've pulled back down, and just like we've falsely broken out here, we've falsely broken out to the downside. The same way this has gone up, tested this zone several times and broken back lower. This is almost 90% the chance of what is going to happen, but now in the opposite direction. Momentum this strong through key resistance levels usually means the upside break is preparing itself for the next bull run. So I can switch back to the daily, and if I use the buy tool, which I would never actually use for cryptocurrencies, but for the purpose of this video here, we can get the long position. Remember, we do not use stop losses with cryptocurrencies as we do not margin trade. If you do, then you can use this tool to plot your take profit and stop loss levels. For this example, we'll leave this flat as we do not have a stop loss. This line here would be our buy entry. We can now set our first target profit here. However, if you think about it, unless you want to time the market, which I do not recommend until you have a few months experience in this market, understanding how these key levels are respected. So for this example, I would actually go to the weekly chart, as this is a long-term investment. And we can calculate this by looking here. We can plot from the very high wick here to the very low here, just before the breakout. We can now apply this to the current bounce here. It's the wick. We're now looking at approximately $535. Now we already have one target here, however this is not enough for me to be satisfied. I'm in this for the long term and I'm in no rush to get instant profits here. And as a matter of fact, I would not even be selling here, unless I saw a reversal forming. So all you do is plot another line here. Just like we've done with this zone, we create our long-term target with a much wider range. And add this here, remove the line, and we leave this as a long-term zone. We now have the weekly chart prepped, we have our position prepped, we've now entered, we've gone long, and we've bought however many ether we can afford to buy. We now see this rising already. The retest is already happening, guys. We can remove this as we no longer need this. The MA is holding as support, and we're seeing this in real time. We combine this with our support level, which has failed to break once again. We're now above the support level, we've tested, the MAs are holding as support, we're bouncing on the trend line, which potentially will be happening very shortly. A break of this level should cause another loop here, and then we explode to the upside. I'm satisfied with that. That's given me enough bias that we are going to continue going long. Now if you like, you can also bring this forward with a counter trend line. We have not used this much as there has not been many setups. But in this example, there is a triangle here. Now as you can see, this is invalid. So we actually draw this from the wick to wick, which correlates perfectly with this candle formation here. So we can also add this to the analysis. So we have 1, 2, 3. We've rejected this level. A potential break now of this zone could be the catalyst that sends us higher. So what you can expect is actually consolidation now you've bought here, where price tests again and again and again until it's at breaking point and it can no longer bounce from triangle to triangle. We then explode from the triangle formation, and this could be the final driver. So it's all about putting all of these scenarios and all of the odds in your favor. And once that's done, guys, start removing levels. You do not need to overcomplicate things. In fact, I'd even remove this. I'm content and happy with my analysis. I know what's going to happen. The lower downside spike level is crucial as we're going long. When you're buying these for the long term and going long, you always need to have downside spike levels in mind. When price is continuously going upwards, keep the resistance spikes in mind, where price will spike to the upside and quickly pull back down to key levels. Now we've broken these down in depth, I'm going to quickly run through Neo and Litecoin without going in too much detail, just to show you this analysis on a full board perspective. So we'll jump to Neo and begin the analysis. We'll start off on the weekly once again. We can already see a trend line forming. We can see higher highs and higher lows. We have the trend line test here, nice and clean. This does not go back in time as it does start from this level here. Again, an extremely clean level. We can add the EMAs already. There's no harm in doing so. From here, we already know there's a trend line. We add some horizontal line tools. There's slightly more manipulative spikes on Neo, and as we can see from the wicks. However, this does give us a nice level of support and resistance. That'll be right there. We'd also have another level right there, which correlates with the wicks and all of the wicks testing here. Now, once we go to the daily, we can fine tune these further once again. As you can see, the trend line here is absolutely perfect. We can give it some adjustments, however not much is needed for this scenario. We can actually increase this here. And what you see is you see a test here, a test here, a test of the wick here, and a perfect test of this level here. I'm pretty satisfied with these levels. Now, with this, I'm actually going to remove this and save this for an intraday level. We have the crucial level of support here. We actually have a crucial level of resistance right here, as proven by the candle bodies closing here and the wicks testing twice. We can now add a counter trend line, as I can spot that immediately. We have 1, 2, 3 wick tests. We've bounced from this level. We're starting to replicate what looks like the Ethereum chart. Just to perfect this slightly, I'll pull this up. Then draw that like that. In fact, we can draw this like that. It's all about perfection, guys. Do not be afraid to fiddle around and get those levels absolutely perfect. We can see the MA crossover. We've broken to the upside. The 18 EMA once again is holding as support. We've rejected a major support level. This is almost identical to the Ethereum chart. And just for some quick intraday purposes, I can draw another zone right here. Price is failing to break these levels. We have a test here. We've been holding for a very long time. We've finally tested one more time and pulled back. However, we can expect another test of this level, another bounce, and another breakthrough. Once we've broken $38.46, the upside is unlimited. And just like Bitcoin Cash, which many of you have seen, once we broke $616, the price absolutely soared to over $1,000 in one day. So what we'll do now is we'll start plotting the horizontal ray tool. We can already see a key level right here. By doing that, I'll plot it on this candle here. The two bodies closed with pinpoint accuracy. However, there's multiple ways to do this. I'm happy with this level, but I'm also very happy with this level here. So what I'll do is I'll stick to this level for the time being. I'll draw the wick just here. Center the back, clean up the chart, and start looking at this on a perspective that not many can actually do. We've spiked down, we've spiked up, we've falsely broken from this level here. We've now come down again. So what we can see is we now have a key level of resistance for the intraday side, a key level of support for the intraday side, and we have our major levels on both sides, should we break out of either of these ranges. What I'll do from here is zoom out slightly. I can see a Fibonacci setup, and that would be from here. We've come up, we've tested, and just like that, the wick to wick has absolute accuracy. Now, whilst we could do this as well, which I will actually do for this purpose, as it's slightly more accurate, and there's a lot of confluences on this chart. The 61.8 lines up perfectly with the support level I set earlier. The 78.6, should we have a manipulative spike downwards, correlates perfectly with the manipulative spike and the wick being tested here. Should you have had this level set up from here to here already, this would have correlated perfectly. Now, the way you actually predict Fibonacci levels and their accuracy is by looking back in time and seeing if these levels have correlated with previous price action, as we covered in the Fibonacci level. And as you can see, this was a key level of resistance here, and once broken, soared price into the absolute stratosphere. So now this Fibonacci is relevant, we can see the levels are respected. we can start to correlate the minus extensions to key levels. Now, as we can see, we have a nice test just here. If we go upwards, we are within the higher wicks and the all-time highs for that matter. So all I'll do is I'll draw the zones nice and wide, starting from the wick here. Leave that there, and the candle close. And for this wick, we will actually do this from this wick to here. These now correlate very well. We'll drag this up slightly, in fact. We can now remove these lines. It's all about playing, guys. It's all about finding the accurate and pinpoint levels. We can set these to green, and we now have our upside targets. And we can accurately predict now, should we get another spike to all-time highs, as we're seeing on a lot of the cryptos right now, we can easily expect a break of this level to take us straight to here. From this point, I can now recalculate. Are we going to see an even further push in the same day, and then we close back on this level? Or are we going to hit this level, reverse back to resistance turn support, and then continue going higher? It's all about preparing in advance. Last but not least, we'll move to Litecoin. The weekly chart once again. Another trend line. And as you may have seen yourself, the trend line for Litecoin is very well predicted. As we can see, all of my levels have somehow just presented themselves, which for the purpose of this lesson, we will actually leave them running. So here's what we'll do. We have the trend line set from wick to wick. We've rejected several times. We've come all the way up. We've pulled back down and we've hit a key level. We've rejected the trend line again. Another fake break of the trend line. Another 2 breaks of the trend line, but we're failing to actually close below. My weekly levels, I set them here as we have a strong barrier of resistance, which once was broken, sent us to the absolute moon. We came back down. We tested this level again. I'm satisfied with this as a key level of support and resistance. We've had another wick spike here. Moving forward, this is actually closed a bit lower. We can see the test here, the candle closing here, the candle closing there, another candle closing there. Just here, we have the candle closing here, perfectly correlating with the candle closing there. Now this is a target zone, and I've set this for when Litecoin breaks to the upside. So when we go to the daily, we can see these levels clearer. The trend line, as you can see, is almost to pinpoint accuracy. So many tests of this level, even after the largest spikes. So I know for a fact this level is valid. We look at the intraday levels now on a much clearer perspective. The resistance we set earlier correlates perfectly with a false breakout. Now whilst we could drag this down here to correlate perfectly with these 2 levels here, it does not make sense. And whilst I would love to put this here, it does not correlate as well as where I previously set it just up here. And you'll see in the future, this is exactly why this level has been set. Moving to the downside, we can see this key level of resistance turn support. Once we broke through this level, we pulled back down. We broke and spiked through. However, we pulled back immediately. And this is where the zones are coming in handy. Not only that, once we broke up, we hit this level here. We spiked up and we pulled back down. Now what we can also do that I've noticed is draw a level here. Move this down to the wick of the candle. We now have a larger zone which is large enough to get away with. Remember, if you start drawing zones down here, you're completely guessing and there's not enough accuracy in this. However, dragging this up to here, we can see correlations on all levels. And once we spike up, we hit this level, spiked through, and we pulled back down. Now, the Fibonacci is absolutely crucial for this chart. As this shows, we've pulled up, we've come down, the C extension should be here. However, is this going to be a 61.8 or a 78.6? By grabbing the Fibonacci tool, we can draw this from the body. Seeing as the wick was such a manipulative spike, it's not likely it's going to be a valid level. By dragging this up, we can see 2 levels now. We have the candle body, we have the candle wick. For this example, the candle body is the most relevant. Now, as you can see, this correlates perfectly with the previous support floor here. And we can actually draw another horizontal ray tool right here. For that, we will do this here. We then add the horizontal and rectangle tool together. By drawing this zone, I've now marked the 61.8 and a key level of support, which would have been valid even without the Fibonacci. The 78.6 correlates perfectly with the predetermined support level I already had drawn. So again, we understand the Fibonacci extensions are going to be valid levels. So all we do is we quickly plot these levels here. This level correlates perfectly with the wick here. I now remove these tools. I grab my horizontal tool and draw a nice zone here. I then draw another zone just here, right in between this level. I remove these. I actually want to remove this level just for the sake of keeping the chart clean and also removing this level here. What we have now is two target zones. Once again, a breakout to the upside could take us easily to this level here. We will then potentially pull back, test the trend line once again, or we spike up, we pull back to this support level here, and we break even higher to 77.50. We pull back to the support level, we then exceed to 82.41. Now guys, that is essentially all there is to this strategy and overall understanding cryptocurrency charts. Once you start placing all the odds in your favor, your key levels should be as accurate as possible. This means spending hours on chart time, moving these levels, adjusting them, getting the ultimate accuracy, and also remembering false breakouts happen all the time. So do not try and look for 100 correlations of these levels. As you can see here, if I draw this to the absolute wick, there are levels respected here. However, it does not correlate with the current price action. By simply drawing this down back to this level here, we see a much more valid level where the wicks go through, but the candle bodies are closing on this level. Now, it's much more important to see candle bodies closing on a level than wicks spiking through. So overall, guys, this is all there is to it. Again, this is one of those chapters where you have to go back again and again and again. Get these levels as perfect as possible. And when it comes to placing your entries, for example, right now, you could see this level has rejected and we're most likely going to be pulling back to the upside. Your targets are set here. All you have to do now is tell yourself, cool, there's a level here. If price pulls backwards, we're going to be seeing around $50. No problem, this is already expected. Another worst case scenario, we pull back to just here. I know price is not going to fall all the way down to $25, and should it do, I will just buy more and accumulate over a period of time. However, for this present scenario, simply I would buy right now and hold this until we start exceeding all-time highs. Even if we pull back from $83, I would not sell. I would simply buy more on the retests of the support levels I've already plotted. Now guys, I hope you've enjoyed this chapter. I will see you in the next chapter. Do not forget to take all of your notes down.